Good evening, I'm Giuseppe Basile, I'm the analyst and trading mentor. You can find the website www.vipstalker.com. I also post regularly on Twitter using the @vipstalker nickname. Good evening, today is Tuesday, April the 29th, 2014. It's 15 past 11 time in Toronto. And in this video I'm going to review for you the first four market. This is a daily update of the information that I provide in my weekly newsletter, and that's an update that is valid for tomorrow, Wednesday, April the 30th, 2014. The four market review in this video are the euro dollar, the SP500 mini future, the dollar index futures, and gold mini. So let's start from the euro dollar. Today we saw this move lower, and days like this remind you that you always have to stick to your plan. So as you will remember, we had an entry here and which produced a free risk trade. So we still have half of the position with stop at these lows at the moment, and whatever the market does, this is not really affecting us, because even if the market breaks this level here, with a free risk trade, is always possible to exit without losing money, and that's the whole job number one of a trader, to gain position in the market that are risk free or have the lowest risk possible. So personally, I'm not really impressed when days like this happen, and you should not be either. And you know, it's not important to catch this move lower. You can actually, do very well in the market just trading the bigger time frames. Now, in this market, what we saw an interesting development now today, because we had a violation of longs here once again, and we saw price appears above this 138.60 level here, and just after one day we saw bears failing. So bulls were successful in breaking the back of the bears, and now today again bears were successful to break the back of the bull. So the back of the bull. So now when this happen, you know very well what I think. If you follow my work a little bit, you know that when that happened to me, it's an indication of indecision, and that's where people who use traditional technical analysis trace their trend line. But the real reason for that is that bulls failed and bears failed. So one after bears failed first, and then bulls one after another, and then when that happens, then it's an indication that the market really does not know where it wants to go. So to me, this is happening on top of an area of support, 137.90 area here, which was tested now 3 times. And on below that there is another area which was 137.21, which actually participation at the level produced a break of the sequence of measurement lower here. So there is this area of support. So at the moment it looks not very high probable that this market will just continue lower and break this 137.90. What is more likely is that this condition of lateral move here will keep developing, and we'll remove this trace here. And now, as soon as the sequence of measure move lower in the 15 minutes will fail, this market will probably reverse and go to trade maybe the 138.70 level again, or it might just break this level and continue higher. This area of support, the 137.90, as a level of target here at previous size around 139.60. And so this is what we have to anticipate in this market. Of course, anything can happen, but this is going to be what I'm going to watch. And actually, when we move into the 15-minute chart here for this pair, then we can see that there was participation at this lows to low, so the market is moving in extensions in this time frame, and the first target has not been touched. It's this 138.05. So if you want to be aggressive, but in the market, remember always that the market and trading is something that you win in defense, not in offense. You can actually consider this level 138.19 with a stop below lows if we break that level. But however, I would go and consider just the next measure move short, which corresponds to a trade that you can see on the 4-hour chart. I sometimes time trades in the 15 minutes, but this is the safest way to go. A break above 138.35 could lead to a potential long here with a stop below lows if that happens. Moving to the S&P500, you know that in the last few days we have identified, actually now it's not only a few days, it's 2 months actually, we identified this area where systematically profit taking and professional traders are taking profits. That's the 1882. If the market continues higher and gets into that area as well, we can anticipate again a sell-off from that level. But now this market starts slowing down, and actually the important area of support and resistance are pretty clear here. We have the 1750 area, which corresponds to a busted setup on the weekly time frame, and we were able to identify this area of potential support back at the end of last year, and excuse me, and this area of support here identified also first level of target here, and it's not a surprise that program trading is taking a profit right at this level here. We also got this area of support 1808, and this area of support actually worked once, supported prices we can see here. Now it doesn't mean that it's going to work again, or could not work again. So we need to see what is going to happen in this market in a smaller time frame. And you will remember that yesterday I actually mentioned the fact that we saw a violation of the all-do halfway back, which is this trace here, and today the market went to apparently find some selling in this 1873 area. Now, it doesn't mean that we are going to continue lower, but that's a possibility. Of course, the next level where we would naturally look for support in this market, and would continue sustaining this move higher, would be 1859.75. If market reverses there, has the possibility to again get back into that 1882 important level, and again we could actually witness some selling there. So it's important to follow the sequence of measure move higher and apply the Fib stalking technique, which is a procedural technique to test support and resistance, in this case to test profit taking, and see if we get there, whether we get a reversal. Moving to the dollar index, you will remember that I will clean this chart a little bit. I want to start again with the analysis, so the areas that are important for your trading will be actually clearer to you. So in the past we identified this area of resistance, and actually this area of resistance, although a little bit dirty here and price went well into that area, the move higher was never able to break this 80 level here. So this area of resistance is actually in place at the moment, and obviously the dollar index is a reverse of the euro dollar, so that's why you know, it's in reality it's not very important to follow the dollar index. I mean, if you follow the euro dollar and trade the euro dollar, that would be quite a pretty good view on give you a good view on the dollar index as well. But I like to analyze this pair as well, because sometimes, you know, helps me reinforcing some of the observation I have on the euro, and sometimes there is divergence between the twos, which always flags need of attention. So what we saw here is that the bears actually failed, because we saw price piercing the 79.63 level. So I removed that, and now we saw this reaction higher, and the market stopped right at that all the way halfway back here. And actually, as you can see, it broke it a little bit. So again, this market, likewise, the euro is actually in a lateral move below resistance. So the euro is above support, and the dollar index is below resistance. So this is what we can actually expect from this market. Now a consolidation below this 80.07 level. And finally, gold. Gold, as you will remember, has confirmed this area of support, 1285, and it's like it's waiting a little bit at the moment, and there is support tested 3 times here successfully, actually 4 times successfully here, although price dipped into this area. As we can see, we're still seeing participation here. Yesterday I mentioned a potential trade, an area of support, which actually materialized today, and that area of support was not only a halfway back here, an ambush trade at this 1287, but it was also a retest of that 1286 important area of support, the larger setup here. So there were multiple reasons to believe that this trade could actually work. Now when we and as you can see, the level here, it's much clearer. This 1286 found support. Not only it found support, but was strong enough to break the back of the shorts here. So at the moment, what can happen is that this market could be retracing into the all the way halfway back long on the 4-hour chart, which is the chart that you see on the screen here, and we could just see the market take off from here again. And so it's very important to study the sequence of measure moves here. Clearly the market is retesting the all the way halfway back here, and as you can see, we have a target in the 1305. So a simple trade would be to enter here with a stop below 1292.30 here, so below this red line. But you know, I don't like doing that, and I always like to see a failure on the sequence in the other direction. So to me, this the sequence here, you know, there is a sequence here, and maybe you can even see this on the 1 minute, although it's a little bit the volume, it's really not here, and this is the E-mini gold. But as you can see here, there was a first measure move here, which brought price into 1296, and again there was the same level was retested here, bringing price into again that first target, and so apparently the market keeps using this high, and that is going to be the level that I'm going to watch here. So if price moves, actually I'm going to use the highs to the previous target here. So if the market actually breaks this level, then actually the support is confirmed. So there will be 1298, 1299 with a stop below lows. I hope this video is useful. I wish you a very good evening and a great trading day. tomorrow. Thank you for sticking around. If you want to receive more information, just go to my website and subscribe for my newsletter. Bye bye now. Thank you.